Hello and welcome to episode 3 of Macro Matters, the economics and politics podcast from Aberdeen Standard Investments. My name is Paul Diggle, I'm an economist at Aberdeen Standard, and I'm here with my co-host Stephanie Kelly, our political economist. And today we have quite a political focus on the podcast. We're going to start by asking, was Abenomics a success? And look ahead to the incoming Japanese Prime Minister Yoshihide Suga, and then we're going to assess the implications of the death of US Supreme Court Justice Ruth Bader Ginsburg and think about what that means for US policymaking and indeed the upcoming election. But let's start by hearing from former Japanese Prime Minister Shinzo Abe on the challenges Japan faced when he came to office in 2012.
On the 26th of December 2012, I came back in office as Prime Minister. At that time, in my country, we saw a tall wall on which many saw the writing, thinking that Japan was doomed. Japan was losing population. The population was aging. Japan could not grow, or so the argument went.
Well, that was Abe, and here is our Japanese economist, Sri Kochugovindan, giving us her take on the mixed successes of Abenomics.
Thanks, Paul. So Abenomics was former PM Shinzo Abe's program to revitalise Japan's economy. It focused on monetary and fiscal stimulus, as well as structural reforms. While it met with some early success, it ultimately fell short of its initial ambitions. Now, the new PM, Yoshihide Suga, also has a number of challenges to navigate: deflation, demographics, the careful timing of the next general election, and of course the recovery path from COVID-19. So can Suganomics succeed where Abenomics failed? Well, only if Suga maintains the policy radicalism seen in Abe's early years, but that faded with time. But either way, it will be a tough path ahead.
Thanks, Sri. So for this segment, we're joined by Sri, as well as Robert Gilhui, our EM economist with a deep interest in Asia, and Luke Bartholomew, our monetary economist, and monetary policy was obviously a key part of the Abenomics agenda. But let's start, Sri, by maybe just laying out what was Abenomics.
Thanks, Paul. I guess we should quickly run through some of the background just to help explain why Abenomics was even needed. Now, the root of this takes us back to the bursting of the credit and stock market bubble in the mid-90s. And following this, Japan endured decades of slow growth, persistent deflation, high levels of public sector debt, so a very stagnant economic backdrop. But also, during 2011 and 2012, there had been a series of events that were incredibly disruptive to the Japanese economy. First, there was the Tohoku earthquake, tsunami, and the nuclear leak in 2011, then the supply chain disruptions following the Thai floods, as well as the sharp appreciation of the yen due to safe haven flows following the euro area sovereign debt crisis in 2011 and 2012. So this combination left the economy crippled and fueled political dissatisfaction, and led to the election victory for LDP's Shinzo Abe, and hence the introduction of Abenomics. Now, the primary aim of the policy was to raise growth and end deflation, and this was done through a three-pronged approach known as the three arrows. So the first arrow would be large-scale monetary stimulus, and the objective here was to lift CPI measure of inflation to a target of 2% within the space of 2 years. Now, the aim was to achieve this by pushing down the value of the yen and boosting domestic asset prices through QE. The second arrow was flexible fiscal policy. Now, this was aimed at providing greater short-term stimulus to support monetary policy, but also to maintain medium-term fiscal consolidation and sustainability of debt. The third arrow was the growth strategy, which was aimed to raise potential growth through structural reform. Now, some of these measures were aimed at lifting productivity, and some were linked to demographics and the problems associated with Japan's aging population and a declining birth rate, trends that are going to continue over the next decade as well. So overall, it was a very ambitious package, and it was aimed to try and lift the economy out of a deflationary, stagnant growth equilibrium that it had become trapped in.
Thanks, Rita. That's a really useful overview, I think, of what Abenomics was and the situation when Abe became Prime Minister. So as Ree said, we've got three arrows of Abenomics, and we're joined by three guests on the podcast. So what I thought we could do was ask each of our guests to grade the success or otherwise of each arrow of Abenomics, and then perhaps talk a bit about what worked, what didn't work, what can the new Prime Minister Suga learn from those lessons as well. So Luke, you're our monetary policy expert. The first arrow of Abenomics was stimulative monetary policy. There were indeed some big policy innovations in the early days, but ultimately the Bank of Japan seems to really struggle to hit its inflation target. So what grade do you give the monetary policy arrow of Abenomics, and why?
Yeah, thanks, Paul. So, I mean, to the extent to which Abenomics as a whole can be characterized as having some important achievements, but never having lived up to the original promise and expectations, I think that's even more true of the monetary policy arrow. And there's a sense in which, it's not just the first arrow, but that it's also in some ways the most important. And I think the reason for saying that is that, for all that Japan was characterized by deep structural issues, that its fiscal policy was a mess, it had all the issues that Suri's already run through. The one thing that really made Japan stand out in a Western or developed market context, I should say, is that it had 20 years of deflation. It was stuck in this deflationary trap back in 2012. And the Bank of Japan had at best an incoherent strategy to deal with this, and at worst, a non-existent strategy at all. So it was an area crying out for reform. And there's a sense in which if you get this bit right, if you get the monetary policy right, if you get the economy on a stable nominal growth path, if you get inflation expectations up, it's much easier to deal with all your other problems. So I think that explains why there was so much excitement around the monetary arrow at the start. And for example, you had the distinguished economic historian Christina Roma describing it in a slightly hokey way as an honest to goodness regime shift, comparing it to Roosevelt taking the US off gold in the 1930s as one of these profound moments of economic change. The idea is that you just shock inflation expectations higher by credibly committing that, to coin a phrase, you'll do whatever it takes to boost inflation. This will be a new era of policy radicalism. And that definitely worked at the start to significantly ease financial conditions. The yen depreciated significantly, long-term interest rates fell further, and equities performed well. And those stimulative financial conditions definitely helped the economy as well. Japan enjoyed something of a labor market miracle. Its unemployment rate fell from around 5% to 2%. Also, participation picked up significantly, especially female participation. Female participation is now above US levels in Japan. It's an extraordinary achievement when you look at the long-run context of female participation in Japan. Nominal income started to grow again after years of stagnation, and deflationary expectations seemed to be banished. At least inflation moved into mildly positive territory. And all of that is very much to be praised. But it then sort of stopped there. After getting inflation into mildly positive territory, we made very little progress of getting up towards the Bank of Japan's 2% target. And from about 2016 onwards, the Bank of Japan seemed to throw up its hands in defeat, did very little to continue to ease policy in response to the weakness of inflation, and once again allowed the impression to set in that it had nothing it could do. And that is why I suppose ultimately, despite those impressive achievements, if you must force me on a letter grade, I can probably give it no better than a C.
Perfect. So are there things that other central banks in the rest of the world can sort of learn from the early successes that the BOJ had, and then it's later sort of giving up on pursuing its inflation target?
So I think there are maybe three things. First, on tools, the Bank of Japan, even before Abenomics, had sort of shown the rest of the world what the future looked like in terms of monetary policy tools. It had taken interest rates down to zero and unleashed its own form of QE way back before the financial crisis, of course, a route that was followed by all the other major central banks. And since then, since Abenomics, it's also expanded its list of assets that it's willing to purchase, equity ETFs, showing that central banks could go down that path and use tools like yield curve control And I think other central banks have been able to observe some of the pluses and minuses and the political difficulties of those different tools. Second, I think what it's shown is just how difficult it is to break yourself out of a deflation trap. I think there was, for quite a long time, a lot of this blithely given advice to the Bank of Japan that, gosh, they must just try harder. It can't be that difficult to beat deflation. I think Ben Bernanke, the former chair of the Federal Reserve, was quite guilty of this himself. And I don't think anyone thinks that anymore, that once you're in a deflationary trap, it is very hard to get out. So the lesson from central banks in that sense is avoid having to start from here. Preemptive policy when inflation expectations are starting to fall is very important. You can't let this rot set in. And third, and sort of related to that, is that your credibility isn't always best preserved by being cautious of following the precautionary principle. I think a lot of central banks have in their mind that the way to be credible, serious institutions is to be quite conservative, to be quite orthodox. But when your policy gets traction in a large part from expectations, by shocking people, by forcing people to reassess the economic environment, then it pays to be radical. It pays to push hard on the policy envelope, and it pays to keep on pushing this message. So radical is the new credible in that sense.
Yeah, and all this, of course, goes back to the topic that we dealt with in episode 1 of the podcast, where we were talking about the Federal Reserve's policy review, and our sort of main message there was that the Fed might have been insufficiently radical in altering its inflation target. So it may be that 5-10 years down the line, we're doing a podcast where we grade the Fed, and actually the Bank of Japan's C looks like it's top of the class relative to other central banks potentially. But Bob, the second arrow of Abenomics was fiscal policy, flexible fiscal policy. And the Japanese government did indeed run some large fiscal deficits to help stimulate the economy, but it also did a series of tax hikes that directly caused recessions. So what grade are you giving the second arrow, and tell us why?
Thanks. I'm going to go for an F on this one. Now, it's a pretty harsh score. A more positive interpretation is that this quote-unquote flexible fiscal policy kind of did what it set out to do. It provided I think I would characterise it as a relatively small boost in the early stages of Abenomics, but clearly reiterating no one had forgotten about the need to get debt under control. It's very much ingrained, I think, in Japanese policymakers' psyche that Japan has a very high level of gross debt. And this consolidation would still need to proceed a later date. So in that sense, I guess it was a success. But I guess why I'd go for an F. So I think I'd argue that fiscal strategy was essentially kind of fundamentally flawed, or was aiming in the wrong places, if you want to stick with the kind of arrows and archery analogy. And that this was really a big drag on the ability of monetary policy to re-anchor inflation at 2%, as Luke's just gone through. So I guess why is this so important? Why was it maybe fundamentally flawed? As I've said, well, kind of simply put, it's nominal GDP that's going to do a lot of the work in making Japanese debt sustainable, particularly if you're using monetary policy to hold down interest rates. And it was always going to be hard to boost real GDP growth by sort of 1 percentage point via reforms, as they were kind of setting out. But you could potentially get more than twice that if you managed to re-anchor inflation from this kind of low persistent level of deflation to something around the 2% level rate. And that's a pretty big deal when your population's falling as fast as Japan's. So why is it so important? Well, simply put, it's nominal GDP that's going to do a lot of the work in making Japanese debt sustainable, particularly if you're using monetary policy to hold down interest rates. It was going to be pretty hard to boost real GDP growth by 1 percentage point per year via reforms, but you could potentially get more than twice that if you re-anchor inflation from a sort of low but persistent deflationary rate towards 2%. And this is a pretty big deal when your population is forecast to fall as fast as Japan's. So to start with, I think I take a bit of an issue with the magnitude of the fiscal boost in the early stages. This was certainly far from the sort of shock and awe that would complement that unleashed by the Bank of Japan. And also, as it evolved, the composition of fiscal policy, I'd say, was also adverse for raising inflation. It basically did the opposite of what was needed if you want to raise, for example, the share of the labour share of income, boost wages, expunge slack from the economy, and push up on prices. The corporates, who at this point were really enjoying record profits, got tax cuts, while consumers, who were far from flush, got tax rises. And we saw that hitting the economy very hard twice when they raised consumption tax from 5 to 8, and then from 8 to 10. And moreover, I think fiscal relative to the scale of the challenge just was never set up to do enough here. Younger people had never really experienced inflation. One warning that inflation was very well anchored. And I think repeatedly kind of saying that you hadn't forgotten about fiscal consolidation and would be restarting it as soon as you could certainly wasn't the sort of commitment to fiscal irresponsibility that you might actually need to try to make if you want to truly shock inflation expectations higher and get inflation anchored at 2%. And I'd also say this was kind of taking place with the backdrop that the reforms could actually be increasing supply capacity. And depending on how you do that, that's certainly not always consistent with raising whole economy inflationary pressure.
So a tough taskmaster, Bob. I would hate to be a student of yours with a grading system like that. So the third arrow of Abenomics was, as we've been hearing, structural reform, and things like raising the female participation rate is one notable success there. But it doesn't seem to me like potential growth genuinely is sustainably increase in Japan. So what grade are you giving the third arrow of Abenomics?
Thanks, Paul. Unfortunately for me, it's going to be a grade E for structural reforms, which is sometimes sometimes this is referred to as the missing arrow. So I think that justifies my E in a sense. But there were some areas of success. There were a number of structural reforms that had been pushed through. And actually, Mr. Suga, when he was Chief Cabinet Secretary at the time, had been heavily involved in implementing some of these measures. Now, these include improvements in corporate governance, and they'd been pushed through very quickly and very efficiently. There was also, on the trade front, there was the creation of the Comprehensive and Progressive Trans-Pacific Partnership, the CPTPP, the free trade agreement with 11 other countries, which was a real boost to Abe's status and putting Japan on the international, elevating Japan in international relations. But in terms of how much this would impact potential growth, these were quite limited. There are also some other reforms to help strengthen competition in sectors such as agriculture, healthcare, and energy. These are all moving in the right direction, but again, not particularly impactful. And as Luke mentioned earlier, the raising of the female labour force participation rate was a success, and prior to the pandemic, it stood up higher than the OECD average. So Womenomics can be counted as a success. There were also changes in the legislation to allow mid-skilled foreign workers to come to Japan, but the migration flows were not substantial enough, and Japan's birth rate continues to decline. So we're still lacking on that front as well. So putting these successes together, as I mentioned, there's no meaningful impact on boosting either potential growth or in any way raising inflationary pressures. You could argue that Abe had achieved the goal of full employment prior to the pandemic. However, this was in part due to the decline in population and, again, didn't fuel inflation. So more significant labour market reforms would be important, and a shift towards flexible labour market would be needed to help place workers in a more efficient manner, to help boost productivity and lead to stronger wage growth, increase the share of income for households, as Bob mentioned earlier. And all of this could help boost demand and possibly generate some inflation, but we're not there yet. So overall, Abe had promised structural reforms in order to, and his aim back in 2012 was to raise real GDP growth to an average of 2% per annum over the following decade. What did he achieve? There was an average of 1% real GDP growth between 2013 and 2019. And obviously the inflation target hasn't been met. So, yep, it's a grade E.
Thanks, Sri. So maybe we'll end this segment by talking, Sri, about what the incoming Prime Minister Suga can learn from the legacy of the mixed legacy, as we've presented it, of Abenomics. And one of the things you outlined at the start there is that he has to continue pushing the policy radicalism that Abe laid out at the start. Do we think that Suga is the sort of prime minister who's going to push that reform agenda and that stimulatory monetary and fiscal policy agenda hard enough to really boost the Japanese economy, or what are our expectations?
Well, I'd say first of all, PM Suga is perceived to be a continuity candidate, and he has pledged to continue with the broad macro and foreign policy framework of his predecessor. And as I've already mentioned, he was very deeply involved in many aspects of implementing Abenomics. Now, just to try and assess the future, I mean, what has he actually announced so far? There's very little detail, but as part of the recent election campaigning, the policies included a real focus on domestic and structural reforms. So it seems that he has taken on board that structural reforms are key, and it will try and address them. So what he's actually mentioned so far includes policies to address low birth rates, and this is to provide insurance coverage for infertility treatments, measures to boost provision of childcare, and again to continue to encourage that labour force participation. There's also the establishment of a digital agency. A lot of focus has been put on this, and this is partly to help boost administrative procedures. The government services are likely to be an early focus, and this could help make the COVID response more efficient. But overall, these are very much longer-term measures, and we could see some announcements to highlight and address these issues, but is very little in the way of detail and implementing at the moment, we would expect. And part of this is because they have the challenges of COVID to deal with. It's very difficult to implement longer-term structural reforms while they're going through this pandemic. So the initial focus will be on the pandemic. Suga has also reported as favouring strong minimum wage hikes, and the idea here is to lift wage growth, correct the income disparity, and perhaps eliminate some unproductive jobs. But going forward, again, the potential for Mr. Suga to push for a faster pace of minimum wage hikes will only occur once the labour market stabilises. So it's unlikely to be soon, given the economic fallout from COVID-19. Some other issues that have been highlighted are structural reforms for regional banks and SMEs. But again, these are quite disruptive given the pandemic. So I guess some of the longer term sectors that are going to be impacted just from that list there would be things like IT services. The banking sector will be impacted. Perhaps raising the minimum wage could help boost retail through higher consumption growth. But again, we're sort of picking at different sectors here, but the overall impact could be quite limited. And I would highlight that one key constraint would be the complication of the timing of a general election. Now, Suga faces two major deadlines next year, and that one is the end of the lower house current term, and that's in October of next year, and the second is the end of Mr. Suga's term as LDP president in September of next year. So it seems that it would be better, a snap election is a high risk, and it would be better to hold an election while the polls show support for the cabinet. And at the moment, those are within the 60 to 70% range. So that would be quite supportive. So there is a lot of focus there on election campaigning, and overall, the measures that have been mentioned, the longer-term structural measures, none of them really stand out as game changers just yet in terms of pushing up potential growth, and they don't really provide very much in terms of reflation. And in fact, in a recent interview, Mr. Suga agreed with comments that the BOJ should not rush to meet the 2% CPI target, but should instead rethink its framework over the long run to adapt to the structural changes in Japan. There were no details given here, but it just reinforces our view that this 2% CPI target is, again, it's unlikely to be a realistic goal. It's not what investors are expecting, but it seems more symbolic, really.
Thanks, Ree. So Suga certainly has a lot on his plate by the sounds of it. And I think the other thing I've learned, in addition to that very thorough overview of the assessment of Abenomics, is that I'd rather have Luke grading my work than Bob or Sri. So sticking with the theme of politics, but moving across to the US, I'm going to talk to Steph now about the death of Supreme Court Justice Ruth Bader Ginsburg. And RBG, as she was known, was a stalwart of the liberal wing of the court, and her death has injected a lot of volatility in the lead up to an already contentious US presidential election in November. So let's start by hearing from Ruth Bader Ginsburg, as well as President Trump, on nominating a successor to the Supreme Court so close to the election.
I hope people will think of me as a good judge who tried with whatever ability I have to interpret the law wisely and to keep it in tune with the people that law exists or should exist to serve.
I'm just doing my constitutional obligation. I have an obligation to do this.
So that was RBG and President Trump. And I'm joined by Steph to discuss the implications all this has for the US policy outlook and the election itself. Steph, so one of the immediate implications that we've been thinking about is what it means for the prospect of an additional fiscal stimulus bill. How does the death of Ruth Bader Ginsburg and the nomination process for a successor change the outlook around US fiscal policy?
I think it changes it for the worst. If you were hoping for significant fiscal stimulus coming in the next couple of weeks, I think the prospects of that have dimmed quite a lot. And in particular, it's worth bearing in mind, congressional Democrats and Republicans were already struggling to reach a compromise on the size of the package. You saw a lot of back and forth between President Trump, Pelosi, and Mitch McConnell, so that's President Trump. Pelosi is the head of the House Democrats, and then McConnell is the head of the Republican Senate. And so these kind of three parties were already having squabbles between themselves around the size and what it would cover, and all that kind of stuff in the run up to an election was problematic enough. Add to that now what is just a huge, obviously hugely impactful social event, but also actually political event in terms of, the loss of a very liberal justice and the decision by Republicans to move very quickly on a process to replace her with someone quite conservative. And all that does, I think, is really muddy the waters and sour relations even more, such that now we're no longer factoring in a fiscal stimulus before the election.
Right. So on the election itself, I've encountered sort of conflicting takes. And on the one hand, this fires up Republicans excited about the idea of a solid conservative majority on the court for potentially generations, or on the other hand, that it motivates Democrats to regain control of the executive and legislative branches of government if they're about to lose for a long time the judicial branch. So who do we think it helps more, Trump or Biden?
So I think it's easy to fall into the assumption that this is really good news for Trump, especially given the way that Republicans and President Trump himself are pushing so hard to move forward with the process. I have to admit, I kind of initially, when I looked at this, thought automatically, I can't see how this is necessarily at least bad for Trump. That being said, I took a look at some of the data, and if you look at a comparative, event, it was the 2018 midterm elections, which took place around the same time as or in the wake of the nomination of Justice Kavanaugh, who was Trump's nominee and was kind of elected to Supreme Court, but amid quite significant scandals. And so that really was quite a polarizing event. And when you look at what happened in the midterm elections as a result, what you find is that Republicans in red states benefited. Maybe they already would have done well in those red states because they are red states. But in states that were firmly red, Republican voters seemed more motivated. But on the other hand, in states that were more clearly blue, actually Democrats seemed to benefit. And it seemed to be that Democrats felt motivated to come out and vote for the Democratic Party in those blue states. So to me, that's kind of saying what we know from recent past is that this kind of thing can just enhance the polarization that already exists, such that you might have people who are already motivated to become more motivated, but where they're probably already going to go out and vote. The big uncertainty, I think, is around swing voters and how they react to it. Now, I had a little bit of look. We have some very initial polling, and as always, worth bearing in mind, they're limited, especially when it's a single poll. But it does seem as though Democrats are showing as the side more inclined to think of this as a major issue. So Morning Consult did some polling asking voters, basically saying, what proportion of voters think that the Supreme Court was, quote unquote, very important in deciding who to vote for in November. And before the death of RBG, about 48% of Democrats said it was very important, the Supreme Court. Now they're saying 60% of voters think it's important on the Democratic side. So that's quite significant. You compare that to the Republican side, 50% thought it was important before, 54% think it's important now. So there really hasn't been as much of a boost in terms of the importance of the issue, which maybe suggests that my immediate reaction, I think the immediate reaction of many, was just that, was a little bit premature. From the perspective of independents, they seem a little bit more mixed. So independents seem to be, so about 49% of independents say that they think that the winner of the 2020 presidential election, whoever that might be, should be the person who decides which justice to replace Ruth Bader Ginsburg in the Supreme Court. So about 49% of them think that. About 31% think that President Trump, regardless of who wins the election, should get to nominate. And then about 21% don't know, basically, which is understandable. So that's really what I think this is going to come down to in terms of how it hits the actual election outcome. It's going to come down to, in specific states, particularly purple states, there are more purple states now than there were in the 2018 midterms, which makes it harder for that kind of clear polarization theme to play out. So instead, we're looking at, in those purple states, how do swing voters in those purple states who aren't known to be particularly conservative or particularly liberal, how do they interpret this? Do they interpret this as the Republicans being fairly successful in their, pursuit of a conservative agenda, or do they perceive it as moving too quickly and being seen to be kind of undemocratic or not consistent with the precedent they set back at the end of Obama's term when they refused to confirm Obama's nomination in advance of the election? And that is ultimately an answer we don't have yet. I think we've just got to pay really close attention to polling, and in particular state polling in the next couple of weeks, which should give us a better sense of where this is kind of playing out.
And I suppose it makes sense that the people who this really fires up are partisans already, whose vote is essentially already nailed on, and undecided or swing voters, it's a bit less obvious what it means for their vote, but that's because they're undecided or swing voters.
Exactly.
If they had a really strong view on who gets to appoint the next Supreme Court justice, they probably wouldn't be swing voters to start with. But yes, that's important, that we can't over read across what this means for the actual election outcome.
I mean, add to that as well, if you think about from the perspective of a swing voter, swing voters usually aren't very far on one ideological scale or the other. And that's where, at the margin, I could probably tell more of a story about swing voters feeling that they don't want the Supreme Court to shift too much ideologically. And this nomination would be replacing a very liberal justice with a very conservative justice and stacking the court 6-3 in favor of much more conservative decision making. And maybe a swing voter looks at that and says that's too far to the right because I'm kind of in the middle.
So let's talk about that. In our base case election forecast that you have, Steph, it's of a Biden victory, but potentially Biden would then be governing with a 6-3 solid conservative majority on the court. What do we think that means for a possible President Biden's policy agenda, or indeed the state of US politics more broadly? I mean, are there things that he then can't do because of that balance of the court, and are there things that he or Democrats are threatening to do because of that quote imbalance on the court?
Yeah, I think that it does probably in some ways limit, even under our base case for not just Biden in the White House, but also Democrats in majority in both the House and the Senate. I think the culture in the US of litigating against major policy and regulatory decisions means that even in this kind of environment, a more conservative Supreme Court pushes the overall balance of legal ideology to the right. Now, the extent to which that takes place is actually a huge source of debate, because you do see sometimes when there's a shift conservative or a shift liberal in the court, that others in the court start to play more of a moderating role because of a preference for, retaining some degree of kind of moderateness in the court. So that's one thing we need to watch, obviously, as the year plays out. And again, this is something we're trying to look into more and more at the moment, is whether particularly there are hot button issues that Republicans, at least the party, would like to address through the Supreme Court. And that's particularly elements of the Affordable Care Act and things around abortion rights. Those are two big ticket issues that Republicans are keen to address in the Supreme Court, and in particular try and roll back and move the balance of ideology more to the right. Now, there's a funny thing going on with that, because as much as that is an aim of the Republican Party, it's not actually consistent with what we see in polling, which is actually many individuals prefer the status quo when it comes to the law. And so even though you can have lots of conservative Republicans, they still tend to be in favor when they're polled of kind of keeping things broadly as they are rather than rolling back, which is kind of an interesting thing to bear in mind. In terms of the administration, the Biden administration, the bit I'd be most worried about is around environmental protections. This has been an area where Ginsburg herself was a crucial voting member in a lot of the legislation that has moved to create more environmental protections in the United States. The Democratic Party is running on a kind of crucial environmental agenda, and all of that can get caught up in the courts, particularly around this question of, well, it's a trade-off. In one way, the science is improving such that it's easier to litigate on environmental issues because the science is more clear that one thing causes another thing. However, the challenge you have is it can be litigated against in terms of federal overreach, or the role of the federal state in terms of deciding these kinds of issues. And that's where Republicans have tended to go to in the past. So that's probably, I think, where his biggest weakness is, and would be, I think, hugely frustrating for his administration if they couldn't move forward on the kinds of environmental policies that they're hoping to after 4 years of the Trump administration rolling back on environmental protections.
And then maybe one final question then for this segment on how seriously are we taking threats amongst some Democrats to then increase the number of Supreme Court justices in a way that they could then, as they see it, rebalance the ideological makeup of the court?
So there's a few steps when it comes to this. So the first step would be, how do you even get to do that? You have to remove the filibuster. And that is contentious in itself among Democrats, particularly moderate Democrats don't tend to be in favor of the filibuster. And just so people are aware, the filibuster basically allows for extended debate to get in the way of approving legislation, and requires that you end up with 60 votes in order to pass quite a lot of stuff in the Senate instead of a simple majority of about 51. So that's when people talk about removing the filibuster, it's basically a means to be able to pass quite substantial policy changes with only 51 votes as opposed to 60. And 51 is a lot easier to get to in Senate politics versus 60. I think the likelihood that Democrats vote to constrain at least or potentially fully remove the filibuster has risen as a result of this spat and kind of the broader polarized environment, and is a pretty realistic prospect in our base case. I think the narrower that Democrat majority is, so if it's a majority of 50 plus the president, which becomes 51, the less extensive to the reform you would kind of see under the filibuster. So you wouldn't see them removing it, but they might constrain when it can be used, which has already actually taken place, ironically, with Supreme Court justices. And then if you did see the filibuster get removed, then you'd start to see discussion about what can you do in that environment. One thing I think Democrats are more likely to do is try to grant DC 2 Senate seats because they don't. So Washington, D.C. currently doesn't have that, which would advantage Democrats in future elections and somewhat tilt the balance back on Congress, because at the moment the Senate somewhat preferences more rural areas, which benefits Republicans. Adding more Supreme Court justices to the existing 9-person bench would obviously allow them to even the score on the liberal conservative balance, because when Supreme Court justices are put in their position, it is a lifelong position. So when these changes shift, they can really last quite a long time. But it's a big move. You've had quite a few Democrats come out in opposition to it. I think a lot will depend on how the next couple of months plays, and ultimately the size of any majority in the Senate, which will determine not only whether they can change the law such that they could even consider doing this, but also then whether they would consider doing this knowing that once the filibuster is gone, and if they were to do this, a Republican administration could just add 3 more judges next time round, and you could end up in this kind of bizarre, never-ending expansion of the Supreme Court, which I think is something no one's looking for.
So just to wind up then, Steph, what does all this mean for investors?
I think what it means for investors is more polarization, which means more uncertainty, more potential for significant policy and law changes, which means more uncertainty, and potentially volatility. Overall, none of this is great news, I don't think, from an investment perspective, because not only in the short term does it clearly reduce the likelihood of fiscal support, which we think is much needed amidst the coronavirus crisis, but on top of that, eventually, if this does come to pass and there's a more conservative Supreme Court, that could make for a much messier policy environment in 2021, and actually much longer term, a reinforcing of that polarization, which only leads to much more uncertainty around major political events and ongoing uncertainty and potential volatility in the regulatory and policy environment that businesses and investors need to operate in.
Steph, thanks very much. I mean, I think it's very clear that the stakes have been raised even further ahead of the election, as if that was even possible. Okay, well, thank you very much for joining us for the third episode of Macro Matters. We continue to have, I think, a really good lineup of topics ahead of us. We'll hope you'll continue to join us. But until next time, good luck out there, and goodbye.
This podcast is provided for general information only and assumes a certain level of knowledge of financial markets. It is provided for information purposes only and should not be considered as an offer, investment recommendation, or solicitation to deal in any of the investments or products mentioned herein, and does not constitute investment research. The views in this podcast are those of the contributors at the time of publication and do not necessarily reflect those of Aberdeen Standard Investments. The value of investments and the income from them can go down as well as up, and investors may get back less than the amount invested. Past performance is not a guide to future returns. Return projections are estimates and provide no guarantee of future results.